Hello everyone, I'm Mark Zane and welcome to Zane Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 21 of the Forex market review. We're going to go ahead and look at some charts. Let's progress and see what's happening. Today I've decided to start on the Euro Aussie. Euro Aussie chart has been going pretty much in a steady increase today, a bullish market over the last probably few weeks. We just want to see what may be happening with this market and the likelihood of where it could go. So the first thing I'll do is I'll just zoom in on this daily chart. I just want to point out this candle right here. So as you can see, it's opened up, it's rallied all the way up to the highs, it's broken out of its highs, and so there's the breakout there. And generally it likes to do that just to stop at any of the people who are going short, because most people put their stop losses just above these recent highs. That's why if you're ever in the market and you have got your entries around these levels, always give yourself some room to move. You know, a good thing is to have an indicator which shows you the daily average, and here you can see the daily average of being around 113 pips. So therefore, if you enter the market, you should expect this candle to move at least around 113 pips. So allow yourself a bit more. In this case, it moved 140. This one here, you can see it's moved about 180. So if I had entered the market here, I probably would have wanted to look left and just said to myself, okay, looks like it's bouncing a few times here. It could probably stop around those levels there. Let me put my stop losses maybe somewhere up at these levels here, and you're probably looking around 160 pip stop loss. And that way you keep yourself out of the market. So what it's then done is push it right back down again. So that's a good signal to indicate that it's very likely it's going to go lower now. And so what we want to do is find out how to get into the market based on some technical rules. So I'll just zoom back out again, drop down to a lower time frame, so the 4-hour chart now on the Euro Aussie. And as you can see, we always talk about this first large AO is wave 3. We want to see it come back to the zero line. So as it's come back to the zero line, which is right about this point here, you see it's just popped below. That's where we go up, look left and look for the highest point, and that's the end of wave 3. We then grab our Fibonacci tool and we go from roughly the start of wave 3. So it would have been somewhere down around about these areas. You don't have to be perfect. You know, you could put it there or you could put it there or there, but you just have a feel of the market over time. And what generally with the wave 3's ended, it will pull back to at least 38.2%. And as you can see, that matches up with this horizontal DSR indicator. So the dynamic support and resistance indicator is showing you where some potential resistance originally was when it came up and they got pushed back. So if it breaks through the resistance area, it now becomes a support area. And here it came down, tested the support and rallied higher. So because this move here hasn't come to this level here, I would still personally class all of this as wave 3, and we're looking at coming back down for wave 4. The next thing we look at is divergence. This is where we have a higher high in price, but we have a lower AO. So as you can see, the AO has come back down and it's made from this high to this high, it's gone lower, but from this point to this point, the price has gone higher. So in simple terms, it's running out of steam. So that's a good indicator that very well we could be turning. So not only did we have that candle pattern, we have divergence on the 4-hour, and then we drop down to the 1-hour to see if we have some divergence as well. And around about the same time frames we do, and now it's pushed right back lower. So on a safe bet, you really need to see it break some type of up movement. And here we've got higher highs with higher lows. So personally, you probably want to be looking at to break those levels, break down, come back up, retest, and then look at selling the market. But some of you like to use a indicator to get in, And some of you might be going, okay, well, it's broken down a bit. I might be getting in around these levels, or waiting for it to push back a bit higher and getting in those levels. It all depends on your trading plan. Just adopt that. But at this stage, the Euro Aussie is definitely looking set to make its way back lower. We'll jump across to the pound yen. I just wanted to point out the pound yen because about a midweek, I put on a Twitter feed that we had a pattern trade here. And as I pointed out, if you take the left wing of the bat, you put it on the 4-hour chart, so on the pound yen 4-hour chart, you go from X to A, from A to B, and then the second wing goes from B to C, and then C to D. So what we want to first see is to grab a Fibonacci retracement tool, go from the highs to the lows, and what we want to see is the pullback initially has to be around 50%. So if it hits 38.2 or 50%, that's classed as a bat pattern. If it goes all the way up to the 61.8%, then we have a Gartley pattern. So this one's a back, they didn't get up to there. Bat pattern comes up, comes back, and then does its last leg extension. And that has to hit around the 88.6% mark. It hit right on the money. You then put your stop loss above the high, so you're probably looking around at least 120 pips, but obviously you want to give it a bit more, so maybe 150, 160. And your first exit point is the 38.2% mark. So let me just reverse these indicators. So what you want to do is the start of this final zigzag move higher. When it starts falling, first place you look at getting at 38.2, and you try to ride it down to the 61.8 if you can. 38.2 was the best point at this stage because you can see it's bouncing on these horizontal indicators. Let me just go ahead and drop a line in there. And also you have the DSR indicator showing the support level around that price. So therefore, if you were in the market, you don't want to get greedy. You probably got in right on the money up there, had a stop loss about 150 to 160 pips, always risk one and try to make double your money. So we're going for at least 300 and 320 pips, and we had 348. So you definitely would have made your 1 to 2 risk reward. And that's why I say to people, don't get greedy, take your profits, move on and let it go to someone else. If you didn't, you probably likely got your stop losses hopefully to at least break even. You may get stopped out if it turns around at those points there. So that was the bat pattern formation. Let's just see if we had anything on the lower time frame. No, we didn't. So in this case, it was only the bat pattern, bearish bat pattern that formed, and that one has delivered to its first target that we announced last week. The last thing I want to look at today is the US oil. Now, a few people have indicated they like looking at the crude oil. Last time we got stopped out, we took a bit of a trade around about this level here, everything set up, and then we got stopped out at those levels there. But that doesn't matter. We just look left, and what can we see? We can see some more support and resistance areas. So we really want to be targeting another entry around these points. So if it all sets up ready to rock and roll, you want to get in. What we also want to do is be looking for that divergence. So we have our higher high in price. We then have our lower low on the AO. So you can see it's stepping back down, stepping back up. So it's trying to push higher with less volume is the easiest way to do it. So more people want it, want to pay a higher price, but less people want to pay that price. So it's pretty much easy way of saying it's running out of steam. Drop down to the daily chart. Again, we have divergence. Here we have the AO coming back lower, and roughly around the same point we have the AO going back higher. The price going higher. The price is still stepping up, and the AO's stepping back down. And our last candle we like to look at is the 1 hour candle. And at the moment we have divergence from this point to this point. which is excellent to see. So not only do we have divergence on all time frames, 1 hour, 4 hour and daily, we are looking at set to go lower. So you really just want to find that point to go lower. And here we had that sort of horizontal support level on the daily time frame. You probably want to look at a breakout lower of that area there. So you want to see it come down. Let me just draw that in for you. You want to see that pull down and then possibly retest it. Look at getting into the market, putting your stop losses at least above these highs, so 2,500, maybe up at these ones. Could be looking at 4,000, and then you want to ride it back lower. And the first places you're going to be looking at getting out where these levels are here. That's a good point to be looking at. And the next one's down around these levels here. So if you do ride it back lower, you want to be looking at those two levels. Again, if you got in around that price and you had around a 2,000 to a 4,000 stop loss, here you've got 36. So you can definitely make 1 to 1.5. And down here, well, you can definitely make at least 1 to 2.5 if you're using this higher stop loss. So that's another setup on the oil, which is looking at coming up. Again, using our support and resistance areas, just look left to see where it's bounced a few times if you don't have this DSR indicator. Again, you can purchase it from our website if you need to. Otherwise, have everything ready to go so that when the market dictates to you it's time to rock and roll, you're ready to take the trade. So thank you for that. For the week 21 of the Forex market review, I hope this analysis has done you justice and that you were lucky enough to take the pound yen trade along with me last week. If not, obviously throughout the year there'll be more trade setups. And again, these are only recommendations that I take. They're not trades that you should take, and you definitely have to follow your own trading plan and seek your own professional financial advice before progressing any further. But to adieu, I wish you all the best in your success. Take care. Bye-bye.